People feel that real estate is expensive at the moment. People are a lot less concerned, well, a lot less, but meaningfully less concerned about the valuations of infrastructure assets. So in theory, they think they're a bit cheaper and better value at the moment. It's about 60% more money in real estate funds in terms of dry powder available to spend than in the infrastructure market. And that excludes direct investments as well. So there's a hell of a lot of money chasing real estate compared to infrastructure. As we've seen, institutions are putting more money in, and that's not just as a percentage of their portfolios, but in absolute dollar terms, that's a lot of money coming in. And they've moved from having it just as a general alternative that may be in the PE bucket and taking up a bit of space in that bucket. They've moved it into either its own asset class, or they've started calling it real assets. People like infrastructure, and they feel it's more secure type of income, though. It's longer and generally more secure because of the nature of the underlying assets. So it's interesting that actually you can see certain infrastructure assets, which are arguably, one could say, mispriced, that you could buy on a real estate basis and be very comfortable with. And what I was talking about a few minutes ago, where there's other more risky assets, they would be pushed to make look like infrastructure assets, so you get a different type of buyer in there. You've got to be wary in this market of when is infrastructure really infrastructure or not.